to the House Committee.
Secretary for Transport and Logistics. Mr. Deputy, I move that the Inland Revenue Amendment Tax Concessions for shipping-related activities and physical commodity trading Bill 2026 be read the second time. Hong Kong is one of the world's leading international maritime centers. The outline of the National 15 Five-Year Plan also clearly supports Hong Kong in consolidating and enhancing its status as an international maritime center. When Director of the Hong Kong and Macau Work Office of the CPC Central Committee and the Hong Kong and Macau Affairs Office of the State Council, Mr. Xia Baolong, visited the Kwai Tsing container terminals last Wednesday, he listened to our briefing on the development of Hong Kong's shipping industry and gave full recognition to the direction of Hong Kong's maritime development to upgrade and develop into a global maritime capital. High value-added maritime services are the core pillar and key competitiveness for realizing this vision. Hong Kong has a vibrant and diversified maritime services cluster. At present, there are about 1,200 port and maritime service enterprises in Hong Kong, representing an increase of about 10% compared with 5 years ago. Given that the maritime services sector is highly internationalized and enterprises are highly mobile, Hong Kong must, in the face of intense global competition, continue to consolidate and enhance the competitiveness and business advantages of its maritime services sector so as to maintain and strengthen the overall strength of Hong Kong as an international maritime center. An ideal tax regime is a key factor in it is a key factor in attracting maritime services company to establish a presence in Hong Kong. Since 2020 and 2021, the government has progressively introduced a series of tax exemption or half-rate tax concessions for shipping-related activities with remarkable results. And commodity traders they are the major users of maritime services, and they are also an integral part of the ecosystem, and therefore to further enhance that would also promote the robust development of the maritime services sector and also the shipping sector. Well, the government also proposed in its past policy addresses and budgets to refine the existing tax concession regime for shipping-related activities so as to ensure that Hong Kong's current tax concessions remain competitive after the implementation of international tax reform. At the same time, we will provide half-rate tax concessions for eligible commodity traders, thereby driving demand for high-value-added maritime services in Hong Kong. The bill seeks to implement the above policy commitments. The bill mainly comprises two parts. First, refining the existing tax concessions for shipping-related activities, and second, introducing a new half-rate tax concession for physical commodity trading. As regards the first part, the government has in recent years progressively introduced a series of tax concessions for shipping-related activities to encourage more maritime service companies to choose Hong Kong as their operational base. These include tax exemption for ship lessors and half-rate tax concessions for ship leasing managers and shipping commercial principals, including ship agents, ship managers, and ship brokers. However, since the implementation of these measures, the international tax environment has undergone new changes. To address the risk of base erosion and profit shifting risks brought about by the globalized digitalized economy, the OECD has introduced a new tax reform package, also known as BEPS 2.0, which was implemented in Hong Kong in 2025. Under the package, where a constituent entity of an in-scope multinational enterprise group with annual consolidated revenue of 750 million euro or above pays tax in Hong Kong at an effective tax rate of less than 15%, it will be required to pay a top-up tax. To ensure that the tax concessions for Hong Kong's maritime services sector remain competitive after the implementation of BEPS 2.0, we propose 4 enhancement measures. First, to relax the definition of ship leasing. Second, while maintaining the existing concessionary tax rates, namely zero tax and half-rate tax, to provide an additional concessionary tax rate option of 15%, allowing enterprises to make an annual election depending on whether they are covered by BEPS 2.0, thereby reducing their tax compliance costs. Third, to introduce a tax deduction for ship acquisition expenditure for ship lessors under operating leases. It is generally expected that the relevant tax deduction may offset the profits of enterprises for roughly the first 5 years. And fourth, to broaden the scope of tax deduction for ship lessors' interest expenses on borrowings. As regards the second part, we propose to introduce a new half-rate tax concession regime for physical commodity trading. Commodity traders are both major users of maritime services and an important component or member of the maritime cluster. Attracting them to establish a presence in Hong Kong can drive the development of the entire maritime services value chain. More importantly, this new tax regime will give Hong Kong a unique competitive edge, making Hong Kong more competitive than maritime centers such as London and Shanghai, which do not have a comparable tax concession regime. To achieve the objective of supporting the development of Hong Kong's maritime service sector, the design of the tax regime focuses on requiring the commodity trading activities carried out by eligible traders to involve physical delivery and transportation, and the relevant sales and purchase contracts must also be entered into in Hong Kong. We propose to provide half-rate tax concessions for the qualifying profits of eligible commodity traders with an additional concessionary tax rate option of 15%, allowing enterprises to make an annual election depending on whether they are covered by BEPS 2.0. As for the scope of physical commodities covered by the bill, it involves up to 55 commodities, covering commonly traded commodities that are typically transported by sea, thereby helping to boost demand for maritime services in Hong Kong. To ensure that the new tax concession can achieve the policy objective of supporting the development of Hong Kong's maritime services sector, we require commodity traders to use maritime services provided by Hong Kong service providers for a certain proportion of the relevant expenditure involving the use of specified maritime services. In other words, if they are only using one service, then their expenditure will have to reach 30%, and if it's more than one service, then the total 31 for the remaining items they will have to amount to some 50%. They will also have to meet the minimum annual turnover requirement of no less than 700 million Hong Kong dollars and satisfy certain economic substance requirements such as those relating to the number of employees and annual operating expenditure. In summary, the refinement of the existing shipping tax concessions and the introduction of the half-rate tax concession for physical commodity trading have received general support from the industry. We expect the measures to help maintain the competitiveness of the existing concessions under BEPS 2.0, while the implementation of the half-rate tax concession for physical commodity trading will bring new advantages to Hong Kong. It is roughly estimated that the measures can bring about economic benefits of about $4.6 billion to Hong Kong each year. The government has already consulted the LegCo panel on economic development on the relevant proposals and has received the panel support. I earnestly appeal to members to support the bill so that the bill can be passed and implemented as early as possible. I so submit, therefore. Thank you, Mr. Deputy. I propose the question to you that the aforesaid bill be read the second time in accordance with the rules of procedure. The second reading debate is adjourned and the bill is referred to the House Committee.
Government motion